Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm starting the next problem, that is problem number 7 in ratio analysis. Last video, 6 short problems I have completed on ratio analysis, calculating different ratios. Now the same 7th problem I'm going to start. So don't join in between. So the complete problems are based on the formulas which I have explained you in the first 3 videos. So watch the first 3 videos, get a full command on the topic of ratio analysis, be perfect on all the formulas, then you come to this video. Then only you can be able to get the command on ratio analysis. Otherwise, if you join in between, you may not be able to understand the formulas. So for any chapter, first introduction is must. So if you have not watched the first video, I suggest you to go to the playlist of my channel, select the subject financial statement analysis, select the topic ratio analysis, watch the first 2-3 videos, then come to this video. Definitely you can gain a lot of knowledge from these videos. Now I'm going to start the next problem, that is problem number 7. But before starting 7th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout and keep it ready before start watching this problem. Problem number 7 I am reading out. Given opening stock 28,000, closing stock 32,000. So opening stock, closing stock, both are given, so we can calculate the average stock. Sales 3,20,000. Gross profit is 25%. Always gross profit is calculated on sales, 25% on sales. Calculate stock turnover ratio. It's very small formula, small problem. So stock turnover ratio, already in the last video we have calculated 2 problems. The formula for stock turnover ratio, COGS, cost of goods sold divided by average stock. So 2 things we require. We require COGS, cost of goods sold, and we require average stock. So first of all, we write the information given. Opening stock 28,000, closing stock 32,000 given. Sales are 3,20,000, gross profit ratio is 25%. We have to calculate stock turnover ratio. The formula is COGS by average stock. First of all, easily we can find out the average stock. Opening stock plus closing stock divided by 2. So 28,000 plus 32,000 divided by 2, 30,000 is the average stock. Now we have to calculate the COGS. Gross profit rate is 25% on sales. Sales are given 3,20,000. So 25% of 3,20,000, you get 80,000 gross profit. Now COGS formula, already previous problem we have applied. COGS, cost of goods sold, is equal to sales minus gross profit. So sales 3,20,000, GP 80,000, 2,40,000 is the cost of goods sold. Now we can find out stock turnover ratio, COGS by average stock. COGS 2,40,000, average stock 30,000. So 2,40,000 divided by 30, 8 times. That means in 1 year, stock is converted into sales 8 times. That's it. So this is the end of 7th problem. Now I am reading out 8th problem. See the 8th one. Calculate the receivables turnover ratio. The formula for receivables turnover ratio, net credit sales divided by average stock. Net credit sales divided by average receivables, average receivables. And explain the significance. Okay, total sales are given 1 lakh and cash sales are given 20,000. Actually, sales consist of 2 types, cash sales and credit sales. So from the total, if you deduct the cash sales, the remaining sales will be credit sales. So 1 lakh rupees total sales, 20,000 cash sales, deduct 20,000, 80,000 are the credit sales. So see here, receivables turnover ratio formula, net credit sales divided by average receivable. Net credit sale, easily we can find out total sales minus cash sale, 1 lakh minus 20,000, 80,000. Now we need average receivable, that is not given in the problem. We have to calculate. How to calculate? Receivables include debtors and bills receivable. If you add up the debtors and bills receivable, you will get account receivable or trade receivable, right? So in our problem, we are given opening debtors, opening receivables, closing debtors, closing receivables. So we add up both. So see, Debtors on 1st January 1992, opening debtors 10,000. Bills receivable on 1st January 1992, opening bills receivable. Add up 10 plus 7,500, 17,500 is the opening receivables. Now we need closing receivables. So closing debtors on 31st December 92, 15,000. Bills receivable on 31st December 92, 12,500. So closing receivables are 27,500. So opening receivables 17,500, closing receivables 27,500. We need average. Average means opening plus closing divided by 2. Average receivables, opening receivables plus closing receivables divided by 2. 17,500 plus 27,500 divided by 2. 22,500 is the average receivables. That's it. Both the values we got, simply we substitute in the formula. Receivables turnover ratio is equal to net credit sales divided by average receivables. Net credit sales 80,000. Average receivables 22,500. 3.56 times. The receivables ratio, receivables turnover ratio is 3.56 times. What is the significance of this ratio? It is asking in the problem. The receivables turnover ratio explains, signifies how many times cash is recovered from debtors. How many times cash is received from the customers. So in 1 year we got 3.56 times. 3.5 times in 1 year. Suppose 3 times. What does it mean 3 times? In 1 year, 3 times we are getting the money from customer. That means 4 months. We are allowing the customer 4 months credit period. So when we give the time period 4 months, so in 1 year, 3 times we can be able to get. Suppose if we take 4 times, that means in 1 year receivables turnover ratio is 4 times. That means every 3 months we are getting the money from customers, from the receivables. That is the significance of receivables turnover ratio. Next, 9th problem. See the 9th problem carefully. It's a long problem. Following are the ratios relating to the activities of National Traders Limited. Debtors velocity 3 months, stock velocity 8 months, creditors velocity 2 months. Here debtors velocity is given in months. That means time period is given to the debtors 3 months. 3 months is the time period given to the debtors for making the payment. So 3 months ka matlab every year 4 times. Every 3 months we are recovering. First 3 months, second 3 months, third 3 months, fourth 3 months. So 4 times. So we can find out the debtors turnover ratio. So debtors velocity is 3 months. So debtors turnover ratio is 12 by 3 is equal to 4 times. So we have converted the debtors velocity into debtors turnover ratio. Simply 12. 12 divided by 3, you will get 4 times. Debtors turnover ratio 4 times. Similarly, stock turnover is given 8 months. Stock velocity is given 8 months. So we can convert the stock velocity into stock turnover ratio. 12 divided by 8, 1.5. So stock turnover ratio is 12 divided by 8, 1.5 times. That means stock is converted into sales 1.5 times in a year. Similarly, creditors velocity is given 2 months. Creditors velocity 2 months. So we can calculate creditors turnover ratio. 12 divided by 2 is 6 times. So simply we have converted the velocity in months to times. So debtors turnover ratio, stock turnover ratio, creditors turnover ratio. These 3 things we have calculated. Now GP ratio. Next line it is given gross profit ratio is 25% and gross profit for the year ended 31st December 1984 is 4 lakh. So gross profit amount is 4 lakh and the gross profit ratio is 25%. By using this we can find out the sales. Once we get the sales, sales minus gross profit, will get cost of goods sold, COGS we can get. Then closing stock of the year is 10,000 rupees above than the opening stock. So whatever opening stock is there, to that opening stock you add 10,000 rupees, you will get the closing stock. Closing stock are 10,000 more than the opening stock. We don't know what is the opening stock. Then bills receivable amounted to 25,000 and bills payable 10,000. So we are given bills receivable and bills payable. Find out closing stock, sundry creditors and sundry debtors. So 3 questions are asked. You are required to calculate closing stock value, sundry debtors and sundry creditors. That's all. See carefully how we are manipulating the formulas to find out those 3 items. Gross profit ratio is 25% and gross profit is 4 lakh rupees. Gross profit ratio 25%. What does it mean? This gross profit is 25% of sales. 25% of sales. Suppose if the sales are 100. Suppose if the sales are 100, 25 rupees is the gross profit. That is the meaning of 25%. 25% means if sales are 100 rupees, gross profit will be 25 rupees. When sales are 100, gross profit is 25. What is the actual gross profit given? 4 lakh. Actual gross profit is given 4 lakh. When 4 lakh rupees is the gross profit, how much would be the sales? When 100 rupees sales, 25 rupees gross profit. When 4 lakh rupees is the gross profit, how much would be the sales? So 4 lakh divided by 25 into 100, 16 lakhs. Our sales are 16 lakh. Now we can confirm whether this 16 lakh is correct or not. It is saying that gross profit is 25% of sales. Now calculate 25% of 16 lakh. Definitely you will get 4 lakh. 25% of 16 lakh, you will get 4 lakh. That means our answer is correct. Sales are 16 lakh. One item we got. Now cost of goods sold, COGS. Sales minus gross profit. Already we have applied in so many formulas, so many problems. So sales are 16 lakh, gross profit is 4 lakh. So COGS is 12 lakh. Cost of goods sold 12 lakh. Now we can start finding out the closing stock. Stock turnover ratio is 1.5. Already we have calculated here. Stock turnover ratio is 1.5. So stock turnover ratio 1.5. What is the formula for stock turnover ratio? COGS by average stock. COGS by average stock is equal to 1.5. How much is the COGS? Already we have calculated 12 lakh. So 12 lakh divided by average stock is equal to 1.5. Now cross multiplication. If I make a cross multiplication like this, then what will happen? 1.5 average stock is equal to 12 lakh. Average stock is equal to 12 lakh divided by 1.5. So average stock is 8 lakh rupees. So by using this data, we got average stock 8 lakh rupees. Now we know what is the formula for average stock. Opening stock plus closing stock divided by 2. That is the formula for average stock. Opening stock is not given. And it is given in the problem that closing stock is 10,000 rupees more than opening stock. Closing stock is 10,000 more than opening stock. We suppose, let the opening stock be rupees X. Opening stock we suppose as X rupees. Then closing stock will be X plus 10,000. Whatever opening stock, to that you add 10,000. You get closing stock. So we have made the assumption. Opening stock X rupees, closing stock X plus 10,000. Now we substitute in the formula. Average stock is equal to opening stock plus closing stock divided by 2. Average stock we got 8 lakh. Average stock we got 8 lakh. Opening stock X rupees, closing stock X plus 10,000 divided by 2. Now X plus X, 2X. 2X plus 10,000 is equal to 8 lakh into 2. Cross multiplication. I am making a cross multiplication here. So 8 lakh into 2 is 16 lakh. So keep 2x on LHS and take this 10,000 to RHS. So plus 10,000 will become minus 10,000. So 16 lakh minus 10,000, 15 lakh 90,000. 2x is equal to 15 lakh 90. X is equal to 15 lakh 90,000 divided by 2. For 7 lakh 95,000. So we got the value of X. What is X? Opening stock. We have supposed here, let the opening stock be X. So X is the opening stock. And X value we got. So opening stock we got 7 lakh 95. And it is given that closing stock is 10,000 rupees more than opening stock. So 7 lakh 95,000 plus 10,000, 8 lakh 5,000 is the closing stock. That's it. First item we have calculated. See here, in the first instant itself, you may not be able to understand. Watch with full concentration. Once, twice, thrice. After that, do it yourself this problem. easily you can be able to find out. You must know how to find out each and every item. Next, debtors turnover ratio. Already we have calculated debtors turnover ratio is 4 times. Debtors turnover ratio is 4 times. So debtors turnover ratio is equal to 4. What is the formula for debtors turnover ratio? Net credit sales divided by average debtors. Net credit sales divided by average debtors. This is the original formula for debtors turnover ratio. But I told you in the previous video, if we don't have sufficient information, we can use alternative formula, emergency formula. So what is the alternative formula? Instead of net credit sales, we simply take sales. Assuming that all sales are credit sales only, no cash sale. That is our assumption. Because we don't have information. So instead of net credit sales, we are taking sales. Average debtors. Average debtors can be calculated when we have opening debtors. But we don't have opening debtors. So instead of average debtors, we can take closing debtors in denominator. So alternative formula, sales by closing debtors is equal to 4. Sales already we have calculated here 16 lakh. So in place of sales 16 lakh divided by closing debtors is equal to 4. Now I am making a cross multiplication. 4 closing debtors. 4 closing debtors is equal to 16 lakh. Closing debtors is equal to 16 lakh by 4. That is 4 lakh. We got closing debtors 4 lakh. But according to the formula, this denominator of average debtors, closing debtors includes bills receivable. When we say total debtors, the total debtors includes bills receivable also. So it is given in the problem, bills receivable are 25,000. It is given last sentence. So we deduct 25,000 from bills from total debtors. So the above debtors includes bills receivable. So total debtors we got 4 lakh. From that we deduct bills receivable 25,000. So remaining 3,75,000 are the sundry debtors. That's what we have to calculate in the problem. It is asking you to calculate closing stock. It is asking you to calculate sundry debtors. So sundry debtors we got. 2 answers we got. Now last answer, creditors. Sundry creditors we need. So creditors turnover ratio. Already we have calculated creditors turnover ratio 6 times. From creditors velocity, we have calculated creditors turnover ratio 6 times. Now creditors turnover ratio formula, net credit purchases divided by average creditors is equal to 6. So original formula for creditors turnover ratio, net credit purchases divided by average creditors. Again, lack of information, we can use the alternative formula. Instead of net credit purchases, we simply write purchases. Whatever purchases are there, the whole purchase are credit purchase only, we assume. And closing, average creditors we cannot calculate because we don't have opening creditors. So instead of average, we take denominator closing creditors. So this is a substitute formula, alternative formula. Now purchases, we don't have purchase also. So we have to find out purchase. There is a formula for COGS. Cost of goods sold. 2 formulas are there for COGS. One formula for COGS, sales minus gross profit. One formula is there, sales minus gross profit. That is the COGS. Second formula for COGS is opening stock plus purchases minus closing stock. Opening stock plus purchases minus closing stock will give you COGS. So I am applying the formula COGS is equal to opening stock plus purchase minus closing stock. Why I am using this formula? Because I need purchases, right? So COGS already we have calculated here 12 lakh. In place of COGS I am writing 12 lakh. Opening stock here I have calculated opening stock 7,95,000 plus purchases we don't have minus closing stock here we have calculated 8,05,000. So we have LHS 12 lakh, RHS 7,95,000 plus purchase minus 8,05,000. We'll keep purchases on RHS and bring the constants to LHS. When we change, the sign will change from negative minus to plus, plus to minus. So here 12 lakh, this plus 7,95,000, if I take it to LHS, it will become minus 7,85,000. Here minus 8,05,000. If I take it to LHS, it will become plus 8,05,000 is equal to RHS. We keep purchases. So 12 lakh minus 7,95,000 plus 8,05,000. You will get 12,10,000. So 12,10,000 are the purchases. We got one value, purchase we got. Now we substitute purchases. In place of purchase, I am writing 12,10,000 divided by closing creditors is equal to 6. Now I am making a cross multiplication. 6 closing creditors. 6 closing creditors is equal to 12,10,000. So closing creditors is equal to 12,10,000 divided by 6. 2,01,667. This is the closing creditors. And according to the definition, this creditors includes bills payable. That means the total creditors includes bills payable also. So in the problem it is given bills payable are 10,000. In the problem it is given bills payable are 10,000. So deduct 10,000. So the above creditors includes bills payable. So total creditors we got 2,01,667 minus bills payable 10,000 given. 10,000 is given in the problem. So 1,91,667. These are the sundry creditors. It's a very lengthy problem. So in the first attempt itself, you will not be able to understand it. So rewind the video, watch it again twice and thrice. Definitely you can get the command. Don't ignore it. If you watch only once and you may not be able to understand, so practically you have to do yourself. After watching this video 2-3 times, then do the problem yourself. Then only you can be able to get the command on ratio analysis chapter. So far we have completed 9 problems. Totally 9 short problems we have completed. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And lastly, don't forget to subscribe my channel if you have not yet subscribed. We'll continue the next problem in the next video.